Said, why is the government demanding a 1099
That is very
on
interesting.
an account that is supposed to be exempt from taxation at retirement? So let me help you with this. Congress is contemplating, I'm not a chicken little sky is falling government conspiracy kind of thing, but Congress is talking about making states allowed to tax Roth distributions. So can I give you the states that are going to do this? New York, Illinois, California. And they jump on that in a heartbeat because the law says federally tax-free and not offsetting Social Security or
But does it say
Medicare.
anything about state?
No. So when we talk about how do we move qualified money into this strategy, we surrender Roths first. We go after the Roth money first because today it's 100% free and affects nothing. You can touch it and not have any effect as long as you're at least 59 and a half.
There's a lot of people in our space that are pro Roths, pro annuities, pro investments and life insurance. And I'm getting the sense that you are a purist on life insurance and believe that all of our money should be in life insurance. I don't want to put words in your mouth, but I want to just clarify that.
So when I ask somebody, how much of your net worth would you never want to pay a tax on? The answer is always the same, all of it. Well, you can't do all of it. You need a house, you need furnishings, you need a car. But those investable assets that are producing the cancers, all those impacts, those 6 other impacts, those assets could be moved over. The idea of an annuity makes a lot of sense. I love income producing annuities that you could trigger later. So for example, if somebody says, okay, I've got $1 I want to put in the strategy, maybe 90 cents goes in the strategy. The other $1 goes into a deferred annuity. And that just grows until my cash value might be getting to the point where it's exhausting. Well, then I switch to the annuity and the taxes due. I mean, gosh, who knows what tax codes are going to be in effect 30 years from now. But if there is this $25,000 exemption for married filing joint or $12,500, and if you get the annuity to do some of that replacement and Social Security, the government knows us based on one transaction. It's not your car you drive. It's not how much money you have in the bank. It's not even your net worth. The government knows us every year by that damn 1040. And if we could show you how to reduce the amount that you have to put on the 1040 or eliminate it completely, you qualify for every government entitled program legally because there's no taxable income. You're spending tremendous amounts of cash.
So
but it's not reportable.
You have clients that are spending hundreds of thousands of dollars of cash a year and still qualify for every subsidy?
Well, then they usually never put all as much as they could, so they will have some income taxes due. But they might be earning spending $200,000 and paying taxes on 40. That's still a good day.
That's a great day.
Yeah.
So you even mentioned before about the Roth IRA and how, this is not investment advice. Obviously, this is podcast YouTube, but you've had people take money from a Roth and put it into life insurance. That's usually not like, there's many people out there that would call that blasphemy.
Oh, sure.
So
Absolutely.
Give the counter to if someone says, Tom, that's malpractice, it's a terrible idea. Give the counter to why you disagree with that.
First of all, I got out of the recommending business. So I don't recommend anybody move money anywhere. I'm telling you can.
Yeah.
The government will allow you. The real question is, what do you want to? Caleb, I want to be known as the rails of a bowling alley. So when we take underage kids to bowl, they don't get discouraged at bowling. I want those rails to come up so that my clients never throw a gutter ball. But I'm not going to pick the ball up. Some bitch is 16 pounds. I'm not going to throw it. But once they throw it, I don't want them to make a fatal mistake. I don't ever want to be on the witness stand saying, Your Honor, I didn't say that. I want to say, this is what the client chose to do. Now, obviously, if the client chooses to do that, I'll give them the good, the bad, and the ugly. I live by 4 Ds: discover, discuss, disclose, and document. Discover what they want, discuss it in great detail, disclose all the good, the bad, and the ugly, and document their decision. And if they when I was a financial advisor, FINRA said your client can do anything they want under your tutelage, but you better document why you made that recommendation because you will be held accountable for the recommendation. I learned that. Then how about if I got out of the recommendation business and helped you understand, let me understand your objective and help you get there, minimizing or mitigating all the kind of potential problems, market risk, income taxation, loss of principal, emergencies. And I love the comment that if you have $1 million in an IRA and you're taking out 40,000, you've locked the rest of the million.
Yeah.
You can't.
It's held hostage.
Yeah, you cannot go in it and buy a car because that has to stay compounded to generate that distribution. I want to mitigate that.